Good morning, traders. Steve Gans here, and welcome to the weekend update on Sunday, March 2nd, 2025. So, pretty interesting week last week, and as I had mentioned, I was expecting some further pullback in the market, which we did in fact get. So, if you might remember, last week we were in this general range here, and I said we could be coming back down to the bottom of the channel, possibly even go through the channel to this prior support resistance area there. And that is, in fact, exactly where we went to on Thursday. Then on Friday, we opened at that same spot, started to move down, and then rallied hard. Now, the challenge here in my mind is that while it was a nice rally, and you do get big bounce rallies after a number of days of selling off like that, we didn't get back above this area. So that's what I'm going to wait to see here early this week. Are we going to be able to break back above these prior lows here? Or are those now going to act as some resistance to us? So that'll be a big tell Monday, Tuesday, etc. We're right now at the bottom of this channel, and that is a point where we could get rejected. So right now, I am neutral on the market. I think there's a 50-50 chance whether we go higher from here or whether we roll over and continue the potential down move. What I really don't want to see, if you're bullish, is you don't want to see a break of that particular low right there, at least not a close. Now, we could go below that a little bit, rebound back above it. That would be somewhat okay. But if we break and close below that, particularly if we ever get here and close below this 200-day moving average, that's a pretty bearish sign. Now, in our support, again, did get that very nice rally on Friday. Also, that rally happened on some pretty high volume. So that's also a very nice thing to have happen. That certainly helps the case that we might still be in a bull mode. Now we look at volatility index here, and our volatility index didn't really explode. It certainly went a little higher on Thursday, but it didn't blow out of these older highs, so it wasn't up in here somewhere. So that also is a bit of a plus. The fact that volatility index, while it did elevate a little bit, it didn't necessarily go to new recent highs. That's certainly also a little bit encouraging as far as our market being able to stay in a current zone. Qs, same thing on Qs. If you'll remember, I had said that we could come lower here on the Qs, and I would expect to hit this support resistance area, possibly hit the bottom of the channel. In the Qs, we didn't hit the bottom of the channel, but we did come back to that support area right there and rallied. Again, much like with the SPX or the SPY, I would love to see us get back above this area right here, back above the mid-range of that channel. That would confirm that our up move, our bullish trend, is still intact. But in both cases, we are hitting tops and rolling back away from those tops. We have not made new highs. So one of the things you always like to look for is you like to see that you start making higher highs and higher lows. That's what tells us that we're remaining in an uptrend. But here we made a little bit of a lower low. Now we did go back and refute that. Had we made a higher high here, I'd feel a lot better. We did not and rolled off that. So again, we don't want to start making lower lows and then subsequently lower highs. That starts to signal a downtrend. Some people would call that a head and shoulders top. Right now, it would be called a double top in this case, because we have that resistance area that came in a second time, and then we rolled hard away from that resistance area. We can see here too, while we did have some up volume in the Qs on Friday, overall we had, 6-7 days of pretty heavy down volume there. So that's a bit suspect, if you will, on the Qs. Let's come take a look now at the volatility on the Qs. And when we look at the volatility of the Qs, also a little bit concerning in that the volatility there did get a little higher. Thursday was pretty high. Friday opened even higher yet. Now it did drop back, but it certainly did start to go above those prior highs, and again made even a higher high on Friday. So that's a little bit concerning as far as volatility on the Qs. And we can see that it did not drop quite as much here. I would have liked to have seen a further drop in those. So that's going to be something that's certainly on the radar here as we go into next week. And then we can look at the IWM, which again is similar to the Russell. Last week I also mentioned that the Russell I would expect to, since it broke out of that channel, to maybe fall a little further. I had this support resistance area in here. It did break that with some conviction, rallied back, and unfortunately when it rallied back, it just rallied back right to that resistance area. So I was hoping that was going to be support, but it became broken support on Thursday as we went right down through it. And again, we had increased volume most of the week there. Then we did finally rally back a little bit on Friday, but that rally back did not break above that area. So in all three cases, we have some resistance hanging out there. I'd love to see us clear those prior consolidation areas in all three indexes. I'd like to see it on higher volume in order to be able to confirm that some uptrends are in fact still intact here. Because right now they're looking a little dicey, which is why I'm saying I'm market neutral right now. I can't really say I'm in bullish mode anymore, but we haven't rolled over to where I would say that I would be in bearish mode either. We're in that limbo, that no man's land. Also on the Russell or the volatility for the IWM, you can see that we did spike up, much like in the Qs, higher than recent times. And then on Friday, we opened higher yet. We did start to settle back down later in the day, but we didn't come down again below that consolidation area. So I'd love to see us go higher through the consolidation areas on all three indexes, and I'd love to see the volatility in all three of those drop by Tuesday, Wednesday. If that can happen, then I think a case can be made that this uptrend is still intact and all systems are still go in a bullish nature. So that, of course, remains to be seen, and we'll see how that plays out come next week. But we also have our moving averages and things like that in play here. So everyone, that will wrap up the weekend market update for Sunday, March 2nd. Now, those of you that are part of the alert service, let's take a look at our current positions. And if you're not sure what that's all about and you want to know more, I'll put a link in the description down below. It's a service where I make trades, predominantly income style butterfly trades in the indexes. And I walk through all of those trades. I show exactly when I open them, why I open them, how I open them, how I adjust them as the market moves up and down. And again, the goal on these is to put on trades that are fairly slow trading. They're going to be open for anywhere from, in most cases, probably 30 days to maybe 60 days, and looking to get anywhere from maybe 10% to 20% out of each one of those. And that's my goal on these trades. And again, I share everything about them with a video explanation of my opening, my adjusting, my closing. So these are the current open trades. There are 6 open trades. This one was the most recently opened one, and it's looking good. It's exactly what we want. We have no risk to the upside, no risk of loss to the upside in this trade currently. So our market can chop around here quite a bit. It can even drop down another 100 points, almost 200 points, before it starts to get pressured a little bit. That position is in great shape. I like it. It was just put on 3 days ago. And again, the key to butterflies is knowing when and how to put them on to have a better reward to risk ratio. I offer a deep dive class on that as well. That's about a 10-hour class. I'll also put that link down below in case anyone's interested in knowing more about that. This also started life as a butterfly. And then when we got up into that 6,100 range where we had prior resistance in the SPX, I did what I call juice this butterfly a little bit. I put in a call spread because I didn't think we were going to be able to pop through that area, and I explained all this in the video when I did it, and that's what's happened. So now, so long as we continue to trade between this 57.50 and 61.25, this T0 line is going to decay, and it's going to mound up in here, and it's going to start bringing profitability into this trade. So that's the goal here, is that we're just looking for the market to stay in this really wide range. That's the nice thing about trading options, is I don't have to pick a specific direction and be right on that direction. I can pick a range and then just let time or theta decay happen in these options and decay out of them. This is another butterfly that was opened here recently as well. This one expires on 4/17. Similar story here, no risk of loss to the upside where it currently sets. And again, just looking for decay to happen over time here. That T0 line is going to start to mound up and start to bring some profitability into this trade, so long as our market, again, just continues to chop back and forth in a general range. And you'll notice my diversification here. This trade is 4/17. This one is the following month, 5/16. You'll notice they also have different center strikes. This one's down around the 5,800 range. This one's around the 5,900 range. So I diversify through the time that is the days to expiration in the trades. That's one way of diversifying. And then also how they're set up to be positive delta, negative delta, etc. Then I have this trade that I did in Lucid. Now, Lucid announced earnings this week. Their earnings were actually quite good. However, the CEO of the company is going to be stepping aside. He's going to be stepping into a more advisory role with the company, a technology advisor. And I think that kind of rattled investors in this one a little bit. All that said, I'm still a fan of Lucid. I don't think that's a big concern in any way. And I'm planning on writing this thing out. So these are leaps. These are out too. So I just feel like Lucid has a couple years here to prove to me that it can do its thing. I have a maximum risk in this trade, just a little over $400, and a maximum gain if Lucid starts to move. Tesla maybe did in the past. I know that's a big ask, but even if Lucid goes to $10, I've tripled my investment in Lucid. Now, SQ, formerly SQ, now it's called XYZ. This was also a leap. This is a long-dated trade, way out there. I did this as a stock replacement, basically. You buy the leaps instead of the stock, and it's cheaper to do so. You have less at risk. However, in the case of SQ, there's something going on there, and I need to check into that deeper. But I will likely be pulling the plug on this position. I know I've said that for a week or so here. I'm waiting for it to get some sort of a bounce. If it gets a bounce, then I want to sell calls against that to bring in some additional premium. Then my T0 line is going to go something more like this, and then I'll have a range that I can stay in. And if that decay happens, I will bring some additional monies into this in that process. So I want to do some more evaluation on this. There is some concerns about financial irregularities with their financial statements. I need to read into that a little bit, see how serious those might be. If I determine those to be serious, I just pull the plug and run. If it looks like it's just fluff, somebody wanting to short the stock or someone that has shorted the stock and is just bringing out some news to try to drop the stock further, which can certainly happen out there, then I'm a little more likely to hang on to this a little bit longer, but I do want to work my way out of it at some point in the coming week. Then the final position here is FTNT. In this position, I have been selling puts now. I've been selling puts almost 3/4 of a year here, over 200 days. And I keep waiting to get assigned this stock. I keep waiting for this stock to come back below whatever my strike price is here, so that those shares get assigned to me. That's actually the goal here. I want to own shares in that company. But so far, I've just been able to roll, take in more money, roll, take in more money, roll, take in more money. This is a strategy that many people call the wheel strategy. And it's just basically an option strategy where you sell, puts until you get assigned. Then once you get assigned, you start selling calls against that and until it gets called away, and then you go through the process again. But in that process of selling puts, for example, I'm up about $4,000 here. I've never owned shares of the stock at this point. I have just sold puts, not have the stock put to me yet. I get to keep that premium each month, and then I go and I sell another put. So once this decays this month, this particular expiration that drops out in 19 days, I will be up just a little under $4,500 in profit in this position if this does not drop back to where I get assigned. If it drops back to where I get assigned, below this 105, my cost basis will be significantly lower because of all the money that I've taken in over the last few months as I've been selling those puts. So that's going to wrap up our current status of open positions, and I'll look to manage these through the week. I'm looking for the market to stay in a general sideways chop, maybe up 50, 60 points, maybe 100 points, maybe down 100 points. Again, the nice thing about these butterflies is up 100, down 100 doesn't really factor into this. What I need to have happen is time pass, stay in this range while time passes, and then have volatility start to drop out. As volatility drops out and time passes, profitability creeps into these trades. So that wraps up the weekend update, everyone. If I could, I'd like to ask people, if you find this of interest and of value, please subscribe. Feel free to leave me any comments as well. Thank you so much. Take care.